Hello everyone, happy Sunday. This weekly outlook is going to be a little bit different than the rest. It will be a little bit more lower quality than usual. I've had a jam-packed weekend so far. So on Friday, I left early in the morning, went on a road trip, and I've been just pretty much back to back doing things. But I have some time here, so I want to make sure I put out this weekly outlook because there was some trades that I took, some that I'm managing, and some future trades that I'm looking to go ahead and look into and potentially just gather and develop ideas on how those trades will look like. And so I still got some more things to do ahead of me this weekend. I know it's almost over here, but I wanted to make sure that I put this outlook for you guys. And there's been some developments during the weekend that caught my eye. So I want to go over those, see how those can impact markets, and just kind of see where we are in general as far as positioning. So that's what I would like to do, and I also just like to go over like the usual news, fundamentals, and then dive into the charts and see what we can do. So right off the rip here this morning, 8:20, the U.S. Treasury, U.S. Treasury Secretary Bessent, he had interaction with Chinese counterparts in Washington. Now, China has been kind of hesitant on this rhetoric. They say that they really haven't been talking to the U.S., but Trump has said that they have. And he says that there's a path to an agreement with China on tariffs, which is good news. So we saw some of those statements last week that really lifted the stock market and the dollar as safe haven demands kind of just tapered off there. So those things could help. These statements here that we see could help that sentiment as far as, okay, now we're getting more demand for risk on assets like the stock market, US dollar in the short run. And we could see some things like gold kind of just take a little bit of a retracement. Now, one thing I also saw that I want to kind of just highlight over, and I want to highlight this because I'm in a trade that is impacted by this. ECB governor see increased likelihood of a June rate cut, so that could see the euro take a little bit of a hit. So let's go ahead and look at the fundamentals real quick. So I've noticed so far that we are seeing more readings into risk on assets like Bitcoin, UK stock market seeing a little bit push, NASDAQ, something really interesting, right? Dollar yen was very heavily bearish along with dollar Swiss as well. And now they're kind of, dollar yen's -1, dollar Swiss is actually now at the 0 mark. Gold now is -1, right? Gold was super bullish, and now it's gotten seeing this -1 reading in regards to only the economics of it, right? The GDP and these factors here. This is not including sentiment and trend, which is subjective to the person. So I like looking at this chart here. If we look at COT positioning, we see that the pound got bought up, but look at the NASDAQ here. NASDAQ got some positive pressure. 4,000 long contracts were added and 1,700 short contracts were removed. That is a really good read, increasing its net position and giving it a positive net change. US dollar seeing some negative pressure. Just looking at that, I want to look at the charts here. And right now, my biggest focus is just paying attention to statements that come out that could really influence the overall sentiment of the market. So we see that the dollar index right here is sitting at this 199 level. Now, we did get a break below it. One thing I was really skeptical of was if it was going to be a fake out or a continuation. Now, where we're at right now in the chart, it could very well be a continuation, right? We could see that it broke, we're getting a test, and it could continue lower. Now, in my opinion, the way I'm positioned, I want to see the dollar go up a little bit more. And why do I think that? Well, first, let's go ahead and look at the stock market. Let's say we do get some deals going for tariffs and things like that, and we see some of those uncertainties cool off, right? Well, we could see a push in the NASDAQ and in this S&P 500. Now, we had this trend line here to the downside where bears really would have had to step in, and now we close shyly above what I think is now going to be support. If this continues and this holds up, and we see some more appreciation in the stock market overall, then in the short run, foreign investors are going to have to transition their foreign currency into US dollars to go ahead and participate in the stock market rally. We have to remember, fundamentally, on the globe, the US is the leader in innovation, in technology, which is the biggest, one of the biggest industries right now, which is technology. So if we do see the stock market rally off of this, and we see those foreign investors coming back into our market, then you will see some inflows in the dollar and the stock market. So with the dollar, I would like it to come higher, right? If this is a breakout and we go ahead and hit higher, in the short term, we could see dollar appreciation as we see those foreign inflows come in. But longer term, I do think that the dollar needs to go ahead and depreciate. Why? Well, a couple reasons. US 10-year yield, right? We are pretty late when it comes to the easing cycle. Now, granted, we've been in a tricky spot here, but other countries have been lowering their rates, and we've pretty much been holding for a long time. So what that could mean is a variety of things, right? I see a couple scenarios for the US interest rate. We could either do jumbo cuts, right, which we do big cuts at a time, or we can just start aggressively every single meeting, cutting surely and slowly. Our US economic data isn't that bad. A lot of people are signaling recession and things of that nature, but our employment numbers, I'll even go ahead and show you guys. Our employment numbers are looking pretty healthy here, right? And we're getting some growth. So April 16th, we had a really good retail sales metric. GDP growth is looking good. If we can get some more positive readings in the PMIs and on the growth side of things, then yeah, we could be very, very much risk on as far as for US assets. And then we could see the Fed having the confidence to continue cutting those rates. So longer term, into the year end and beyond, we could see a weaker dollar. So how am I positioned and how is it going to look like in the future? I'm going to show you my positions that I have, and they're a little bit risky. So I'm going to start off with one of the losers that I have. This is a euro dollar short that I went into a little bit prematurely, but that's okay. We're currently in some drawdown here. I have to stop here and I'll go more into it. Now we've seen in the news terminal earlier in the video that the ECB is expecting more cuts. So I do expect this to go down lower a little bit, and that's just my opinion, my guess here. Longer term, I want to go long euro, right? If we see that the US dollar is going to continue cutting their rates, then I do think that the euro is positioned to go higher. But I do need a pullback and a healthy one, if that. So I am targeting this 112 level here for the euro in the short run. Once we get there, we could go even lower, but that's my safety line, right? If we see, this was resistance now turn to support on the higher time frame, I'm going to just pull my profits here. If we retrace lower, even better, then I get to buy at a more effective rate. But this is my opinion here. So looking at the lower time frames here, I wanted to see multiple candles close bearish before I go ahead and jump in this counter trend trade. Now, because I am counter trend, I am short in sizing. So I'm not really putting that much size because I know I'm going against the grain here. So this is a little riskier bet, but this is what I was looking for, right? We were in this range for the euro. We broke out, cool. And then we started coming down here in this range and we've respected this resistance. So now we could say hypothetically, this could be resistance here. And so now I'm trading here, trying to target, this level here. If we get a breakout here, then I will just trail my stops here just to kind of guarantee some profit there and then just get taken out right here. Now there's a chance though we could go even lower and that's okay. But for the time being, my take profit is going to be at the 112 level for the euro dollar. Another position that I have is in the dollar yen here. We saw that this level on the higher time frame here is really respected. As soon as we hit this level, this 140 zone, we went ahead and jumped higher now. So my target for the yen is going to be either the 145, 144 level. And look, if we see right here, really, really, really small size here. I'm not trying to, make a killing off of this move, but I do want to go ahead and be active and involved. And if I can get a counter trend into my overall trade idea, which is going to be long-term shorting the dollar, then I'll go ahead and do so. So we're up a little bit here. Not great, but this is, my first profit target. Maybe we can get to the 150 level if that's the case. And if we do, let's say we break this level that I think is resistance, break, retest, continue up, then I'll just trail my stop here and then, to keep trailing as we go. And that's what I usually do with these trades. Dollar Swiss, we got this really, really big flush on the lower time frames. I was seeing some bottoming patterns. I always say that I want to be on the right side of the V, so I never want to catch a falling knife. And so if we just go in the lower time frames here, we're making some good higher highs and higher lows. If we see that continue, right, let's say this level continues to hold and we go higher, then I want to target maybe like the 04800 or even above that, and I'll just trail my stops as I go. So that was my idea for the dollar Swiss. Most of my trades here, like this one's already at break even, dollar yen's at break even, so now it's more of a just letting it run type of thing. But yeah, if we hold this level and continue upwards, I'll trail this stop even further up to here. Dollar Canadian is a really good one that I like, but it's taken a little bit of it's lagging a bit, I would say. But I like this trade a lot. I talked about it on Nick's live stream, the A1 Trading live stream. For those that don't know, I'm on every Tuesday in the mornings, and I share my thoughts, opinions, and trade ideas. But I did like that this was resistance for a very long time. Now it could potentially become support. And so I wanted to buy at the bottom of this range, which I did. And I've been adding positions very lightly as we are on the right side of the V. Similar to the dollar Swiss, right? Price action wise, we are seeing some higher lows being formed on the very low time frames. So we'll see if we can get a push higher. But my premise for this trade here, and I don't plan to be on this trade very long, Canadian dollar is very much influenced by oil. And so if we look at the oil chart here, we are at this level. Now we tested it a little bit. So if we continue to the downside for oil, then we could actually see dollar Canadian appreciate even more. So I like this chart and I like this trade when multiple charts align fundamentally and technically. I really, really like those trade ideas. So that's why I added that second position on the dollar Canadian. Longer term, what am I looking at, right? So I know I'm going against the grain here, counter trend, a little bit more risky, but all of my positions are smaller in size than what I usually do. And knowing that, right, I also have small positions because I know that I'm heavily correlated in one direction. I have that correlation risk, right? So this is effectively, going long dollar in one big position across various assets. Now, why I chose dollar yen and dollar Swiss? Well, these are risk off assets. So the yen, the Swiss franc, and gold do really well when there's risk off. And so when we see these tariff deals being negotiated and the uncertainty being taken away from the market, that could actually lift demand for risk on assets and take away some of the demand for safe haven currencies like the franc, the yen, and gold. So that's why I took those positions. Dollar yen, I'm taking it off the backs of it being very undervalued at this very nice level technically, but also that we could see some more oil depreciation, especially if we get a resolution in Russia and Ukraine. That could very well lower oil prices even further. Euro dollar, basically a position against the dollar. Euro dollar is also known as the anti-dollar, as it makes up most of the percentages in the DXY basket. So just want to see this pull back to the 112 level. Also, now we see some news that there could be further rate cuts as early as June. So that's the trade that I'm taking. I'm going to actively manage it. I have my stops here above this range resistance, and hopefully we can get lower here. But if we don't, that's okay. I understand that we're going against the trend here. So with that in mind, smaller size with the expectation that, we're just taking stabs at the market. But yeah, that's my weekly outlook. Hope you guys have a blessed one. Trade safely here. And if you don't watch me on live stream, I would consider you hop onto the A1 Trading live stream on YouTube. You can catch me on Tuesday where I share my thoughts, opinions, and trade ideas. But thank you guys so much for watching. Hope you guys have a blessed one. Happy trading, safe trading. Bye-bye.